Joining me right now is Oxbow Advisors Managing Partner Ted Oakley. And Ted, it's great to have you this morning. Thanks very much for joining us. Anything that struck you from that debate last night poised to move markets this morning?
You know, Maria, I thought that probably the supporters of President Trump probably felt like it's almost like coming out in the second half of a ball game. You make some adjustments and you do a lot better. And I think they probably felt that way. I think on the other side, they probably felt like he held his own, maybe not to a degree they would wanted. But what I'm seeing in the marketplace is that everybody felt like, well, it's okay. It doesn't seem like anything blew up on us, so I think we'll be all right in here.
Is there a different investing strategy depending on who wins? You know, I've got a list here of sort of the buckets, the Biden buckets and the Trump buckets from Wall Street analysts, because, of course, strategists now are trying to come up with the number and the type of stocks you want to own, depending on which outcome happens. Do you have a thought on that?
Well, I think one of the detrimental things to business would certainly be the tax plans that are coming out. If you look at what's going on from a rate standpoint, if you look at the real estate business where you negate 1031 exchange and those sorts of things, I'm hoping if they get in and do that they can really understand what makes the country go, because a lot of those things will not be good for business.
Yeah, I mean, you've got things like the proposed tax increases from Joe Biden, $4.3 trillion in tax increases. He wants to take the capital gains tax from 23.8% to 43.4%, Ted, and a tax on dividends, which is now at 23.8%, all the way to 43.4%. That is a big hit if you own a home and you make money on that home. If you have stocks and you sell your portfolio, you're giving 44% to the government. Do you think that causes a stock market sell-off if Joe Biden wins?
You know, Maria, what it causes is it causes people to decrease activity. Just think about it. If you don't have 1031 exchange in real estate and the tax rates that you just mentioned, it causes people to say, you know, I don't think I'm going to sell that. So I can't buy something else because they pay so much money that they think, you know, I think I'll, and I don't think people factor that in, but all of a sudden activity slows down.
Real quick, Ted, before you go, how would you be allocating capital right here?
Well, I think you have to be careful on the bond market right now. We allocate both short and long in the bond market. On the stock side, we still own stocks. One of the things we found is I think people are missing. The 10-year has gone up almost 30% in rate just in the month of October. I'm not certain anybody's looking at it, but I haven't seen the Fed come in on that yet. And so I'm not certain what they're doing. But on our side, we're fairly the same way we were 2 months ago. We had always had some liquidity, and we still have some liquidity.
All right, Ted, we'll leave it there. Great to talk with you this morning. Thanks so much. We'll be watching, of course. Ted Oakley joining us this morning.